I please welcome Sahil, who is a portfolio manager on the emerging market debt team. He's joined Morgan Stanley in 2004 and has 17 years of investment experience. Sahil received his BA in economics from Brandeis University and holds the Chartered Financials Analyst designation. He's also a member of the CFA Institute and the Emerging Markets Investors Alliance. Welcome, Sahil. Why don't we switch over to Sahil to give a very brief comment on his views and thoughts on the emerging market fixed income space.
Sure. Thanks very much for the opportunity and the introduction. So I will speak from the vantage point of an emerging market debt investor, but I think a lot of this will probably apply to anybody who is investing in any asset class in emerging markets. I'm sitting here today talking about and looking at returns on our screens for 2020 that don't look too bad. Low single-digit returns for the external debt asset class, about 3.5% for local currency debt when measured in dollars. And you would think, okay, that was not a great year, but not terrible. But obviously that belies the underlying truth and the volatility that we saw, especially starting in March of last year. And what we had was a large external shock, obviously, to aggregate demand across the globe. And this wasn't unique to emerging markets, but they were particularly hard hit. And then we saw a response mechanism, which first started in the developed markets and then percolated through via the IMF, but also through a lot of these governments' own fiscal policy and monetary policy throughout emerging markets. And where we are today is we have rates that are much lower than when we began the year or the previous year. We have fiscal policy that's much looser, and some countries entered this crisis that we just are perhaps still going through in certain countries with more fiscal space, others with less so. And so what we're looking now ahead in the next 6 to 12 months is to understand after the shock, after the response to the shock, how are countries across emerging markets going to navigate the next few months? From a fiscal perspective, are they able to pay back their debts? If so, are they amending their fiscal policy going forward to give a credible signal to us and other investors that they're able to do so? And what's going to happen with monetary policy? Will rates remain low for much longer, or should we start thinking about normalization? And what's going to happen to commodity prices, which obviously took a nosedive in the early part of last year, have recovered to some degree. Will they continue to go higher? What does that mean for a lot of emerging market economies that are reliant on oil exports for their current account, for their dollar receipts, and for growth and for employment and things of that nature? So that's what we're focused on. We're fairly optimistic on the outlook as a baseline. We acknowledge there are some risks to that outlook, and we can perhaps get into that later. A lot of those risks emanate from whether or not the vaccines that are now being distributed throughout the world, including in some emerging markets, will they be distributed at a pace that's fast enough? Will they be effective? Will they allow the service economy to actually resume? And we're starting to see some signals of that. So while acknowledging the risks, we have a fairly positive outlook on emerging market debt, both on the local and external or hard currency side in the next 6 to 12 months. I think I'll leave it at that for introductory remarks and maybe give it back to you, Steve. Thank you.
No, thank you, Sahil. And it sounds as though things aren't looking as negative as I think a lot of people are feared, particularly in the fixed income space. And you talked about rates in particular, but I think related to that, there's also been a lot of questions about the outlook for inflation, especially given the amount of liquidity that's being pushed into the system by many of the central banks across the world. Now, what are your thoughts or your team's thoughts on this outlook?
Sure, that's a great question. I think if I were to answer that in terms of the aggregate asset class, overall emerging markets, we're not at the stage where we're worried about inflation just yet. The reason I say that is, although we're optimistic on the outlook, we're coming from such a low base when you think about things like the output gap, so the difference between an economy's potential and actual growth rate, there's still quite a gap there. And until that gap is to reliably close, we don't see the buildup of the sort of inflation pressures that would make us worried about things like central banks suddenly talking about hiking rates. Now, there are some exceptions, I think, across the world, but within emerging markets as well. We have countries like Turkey, which, despite the slowdown, continue to have inflation running above target. So over there, we expect the central bank, which has actually been hiking rates, which is a departure from what you've been seeing in most of the world, including in emerging markets. So you will have exceptions like that, where central banks that didn't have the space or never had inflation come down are going to remain hawkish. But by and large, whether you look at Latin America, even certain parts of Asia like Indonesia, Russia, we think inflation is well behaved, and in fact, we see opportunities for some EM central banks to continue cutting rates, so not being worried about hiking anytime soon. I think once our outlook materializes, let's say we have this conversation again in 6 to 12 months, and you're seeing that output gap close, you're seeing the demand side inflation pressures, then the conversation will change. But with a few exceptions, we're not too worried about inflation in emerging markets right now.
Okay. And then in terms of growth, I mean, obviously 2020 was a tough year for growth across the world, but now there seems to be quite a bit of expectations built in terms of the recovery that's going to be happening related to the rollout of vaccination, et cetera. But in terms of the sustainability of that growth going forward, what are your thoughts?
Yeah, I think it's a good question to separate maybe the cyclical upswing in growth that we're seeing at present versus how sustainable or structural it is. On the cyclical side, we're seeing already evidence of this both in developed and EM markets, and maybe Vishal can speak to this later. A lot of companies have very low inventories, and they're starting to finally build those up. And we're seeing early signs of that. I think that in and of itself will help drive some of the manufacturing cycle. And that's obviously going to be positive for growth. I think on the structural side, the sustainability that you flagged, what's very important is not that we have this expectation of the vaccine rollout, which has started to occur, but can that be sustained? And do we see that it's effective enough where the global economy can really reopen, where we can have mobility of people, people going out and consuming services that are by definition only be able to be consumed when people can move around freely and are not locked down at home. So I think we're going to need to see that to gauge whether this recovery, which currently I think is more cyclical in nature, can be seen as a structural recovery and growth.
Okay, understood. That's a great summary in terms of what's been happening in your outlook.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书与投资人须知。